Hey, I'm Dave Mecklenburg from Tiger Shark Trading. Today we're going to talk about breakouts. I'm going to show you how to trade the breakout stock watch list that I put out every day. But before we get into it, I remind you there's a high degree of risk in trading. Been trading for more than one day, that you can and will lose money trading. Only trade with money you can afford to lose. I know we got some new people coming through. Just very briefly, I got in this business almost 20 years ago now. So I was working at Trading Markets, the first publisher of trading books, and then eventually courses, all that good stuff. But there's Street Smarts written by my old boss, Larry Connors, with Linda Ratchke, back in 1995. It's $175 for that book in 95. That's about $260, $265 in today's dollars. So very expensive to get information. So I tell you this, that number one, I learned to trade same way as you. Read a bunch of books, went through courses. Most of the stuff's available for free online at this point, but it's the same stuff I learned from. Number two, no one's going to have all the right answers for you. You can't copy someone's exact strategy. You're never going to replicate what someone else is going to do. We all have different things going on in our life, different risk tolerance, different account sizes, available time, skill. I consider getting orders off without slips to be a skill that requires a lot of repetition. So many of you can't do that at this point, but you'll eventually be able to do that stuff. But so the point is, look, you're going to have to take a strategy and kind of do your own tweaks on that last 10, 15% so you can get it to work for you based on your particular situation, your psychology, your account size. And then the last thing, I've been talking to people, I guess 18 years at this point. So I've talked to thousands of people like you. I'm an expert on how people like you lose money trading. So again, use me as a resource. I'll stick around and answer your questions on anything to do with trading. I don't have anything to sell you, so I don't have any ulterior motive of telling you something with your question. And if I don't know the answer, I can point you in the right direction. All right, so I do want to remind everybody before we start that trading's hard. I understand all the marketing tells you how easy it is, but if you accept the fact that it's hard, you do a lot of things differently, do a better job of protecting your principal, better job of getting in your reps without blowing your account on your first 3 or 4 trades. So again, trading's hard. Corollary to that is no one sells money printing machines. There's nothing you can purchase, something I can give you that's going to magically print money tomorrow. So stop believing that stuff. I'm going to give you all the tools to put in the repetitions. I'm going to show you how to trade this plan that I put out every day. And hey, if you look at this religiously, you spend 10, 15 minutes every day looking at this, you will know how to trade after a few months. All right, if you don't do it every day, maybe you'll know how to trade at the end of the year. But hey, the reps are going to make you understand what a strategy is and how to implement a strategy. Right, the list I send out, it's not stock picks, it's implementing a strategy. Then hopefully the last thing is I am going to save you guys hundreds of hours from spinning your wheels if you just listen to a couple points I have here today. Okay, can I do one more mic check here? Looks like someone had a problem. A couple of people can tell me you can hear me. Great, I'll keep going. Again, keys to a trading strategy. I do this with any strategy. So these are things I think about as I build a strategy. Number one, we want to control our risk. Think about our downside before we think about the upside. A stop is one way to do that, but there's various other ways you do it, basket, long and short. Got to control our costs. Commission's the most obvious thing. Again, I consider wide spreads and slips to be a cost. So, you know, if we're day trading and we have a small edge, we can't give away our edge to slips and commission. You got to get a good fill. Again, that's a skill that takes a lot of repetition. Simple is always better than complex. The higher the complexity, the higher the likelihood of errors. Simple seems to stand the test of time, gets outside the noise, gets outside the big money. Range, volatility, whatever we're trading, needs to move each day. So my stock lists that I put out are always S&P 500 stocks of a certain price. They move every day. They have tight spreads within a few minutes. Heard the trend is your friend. So we do use a trend filter in this strategy. I don't always use it, but again, these are just things I address here. So I use a trend filter above or below the 50-day moving average. And not only when we decide the trend, we want to decide a momentum, that trend is speeding up or it's resuming. So if you're in a pullback, hey, you're only taking the pullback when it resumes the direction of the trend. So I always want to take a trade when it's going in the direction I want. So again, usually breaking a previous high or a previous low. So again, momentum's in our favor. Confluence of leading indicators. Again, new traders like indicators because they think it's a way to print money. We know that's not true, but a leading indicator, a lot of people would say, well, all indicators are lagging because they're a derivative of price. But in my case, how I define kind of leading indicator is when you take a trade, you know your entry and exit ahead of time. So a leading indicator is going to be something that prints across the price charts. Right, when you're looking at MACD, RSI, stochastics, those print below the price charts. You don't know what price it is you're entering. You don't know what price it is you're exiting. If you're waiting for RSI to hit 35 to exit. So we want things that print across the price charts that give us our levels as we take a trade or before we take a trade. So obvious things, major moving averages, the 20, the 50, the 200. All the big money uses it. They don't change intraday, just a little bit at the end of the day. Fibonacci retracements, extensions, Elliott wave, even better recent highs and lows. Today's high, today's low, yesterday's high, yesterday's low. So those are all leading indicators, and a confluence means, hey, two or more of those are lining up. All right, and then, hey, our target's significantly larger than our stops. So as an individual trader, we're gonna be right about 50% of the time. So our edge isn't really being right, our edge is in our money management, that our winners are bigger than our losers, that we cut our losers once we're outside of normal volatility, and we ride our winners to even bigger wins. Again, easier said than done. We're wired to do the opposite. We're wired to hold on to our losers. It's not a loser if it comes back to break even, right? But the problem is losers become even bigger losers. We're wired to lock in our wins early for fear of them coming back to break even, giving back your money. But of course, winners become even bigger winners. We're also wired to want to be correct. Again, I just said, hey, you're gonna be right about 50% of the time. So you're gonna have to train yourself, get into repetition to accept the fact you're gonna be right about 50% of the time. We're wired to want to be correct. We're wired to look for that strategy that's right 80, 90% of the time. Again, doesn't exist. The one slight exception there is selling options strategies, but of course, your losers are much bigger than your winners in that case. We're also wired to make things more complicated than they need to be. Hey, if you just add these extra elements, it'll work better. So again, these are all things I address when I look at a strategy, and then things you need to get the repetition in. So this is what I consider a good strategy if we're day trading stocks. Maybe something similar, the money be something similar, whatever you're trading, if this were futures or, say E-minis, or you're looking at Forex or whatever, but I'm looking at 4 to 6 cents per share per trade. What does that mean in dollar values? Well, multiply your share size to get a dollar value here. So if you're trading 1,000 shares on every trade, that's 40 to 60 bucks per trade. All right, that's winners and losers. So if our average winner was 30 cents and our average loser was 25 cents, and we took equal number of winners and losers, that would average out to 5 cents. If you're trading 1,000 shares, that'd be 50 bucks per trade. All right, consider that a pretty good edge. We're looking for a small edge, exploit it over again. All right, probably going to take about 100 to 150 trades per month. And then, hey, if you can pull 4 to 7 points out of the market, you're doing pretty well. Again, multiply your share size, get a dollar figure, 1,000 shares. at 4 points would be $4,000. 1,000 shares at 7 points would be $7,000. So you see, hey, at some point you need to really kind of step up on size, probably to make some money here. Of course, whatever strategy we have, we're going to follow the rules. So even though this isn't going to be an automated strategy, that in this case, TradeStation is going to get us out of trade, in and out of trades, we're going to trade it like it's an automated strategy. Whatever the rules are, we follow the rules. I'll show you how you can kind of change the rules or track those rules and change those. But the rules are the rules. And again, remember that money management is our edge, right? We're going to be right about 50% of the time. So we need to develop a strategy that we can cut our losers once we're outside of normal volatility and ride our winners to even bigger wins. All right, so this is kind of the idea behind most of these strategies. Those of you guys who are new, what I'll generally ask is, hey, what do you see? These are daily bars on just a random S&P 500 stock. I could have picked anything. This happens to be ExxonMobil, but any time period, and this is before huge volatility. I just want you to notice that over a 3-month period that we got big bars that happen all the time. All right. So you guys can see these big bars. And these are, again, daily bars. And this should graphically show you, hey, big bars, big rangy days happen all the time. That the possibility of big winners happen all the time. So if you had guessed the direction of the trade here, if you had guessed, hey, it's an up day or down day, you could be right about, if you got a 50% chance of guessing right, if you entered that trade and it trended the whole day. So even better when you see these kind of small wicks. So here in the direction of the trade. So here, so this has got a big wick in the direction of the trade. So that maybe you would have guessed wrong, big wick direction of the trade. But small wick means if we were to blow this up on say 5 minutes, that we guessed right and it went in our direction the whole day. Red bar, hey, we guessed it was a short and went in that direction probably most of the day if you got a big bar with tiny wicks, right? Now, if we guessed wrong, like say this big one here, you guys probably can't see this anymore, but there's a big wick. Hey, it was selling off, so we said, well, we're going to go short, but it turned out it actually was an up day. It had that big wick. So maybe we'll get stopped out. But again, if you did this 50% of the time where you're getting stopped out and the other 50% of the time you're catching a big winner, you'd make a lot of money in trading. All right, so that's all I want to kind of show you here, where you can turn a winner into an even bigger winner, that you can ride these big bars. And that's kind of the basis of these strategies that I put together. Enter early, hold towards the close for the biggest possible winner. All right, so let's look at this. So this setup that I use is a narrow range bar. So we're looking for the most narrow range. That's the high to low of the past few days. The trend is going to be above or below the 50-day moving average, and I'm only going to trade in the direction of that trend. So if I'm above the 50-day moving average, I'm only going long. If I'm below the 50-day moving average, I'm only going to go short. All right, so here's it is a trending stock. Here's the 20, the 50, the 200. So the yellow is our 50 that I care about. So here's our narrow range day. So I'm only going long. So if I break the high of this bar the next day, that's my trade. All right, so if we were to blow this up the next day, hey, opens up, gets us an entry on the second bar, and kind of trends the rest of the day. All right, same thing going on. I got a red bar, a down bar, but again, we're above the 50, so I'm only going long. I don't care that it was a down day here. I'm only going long because we're above the 50. So if we break the high of that bar, trigger a long, right? The next day, sure enough, fourth bar breaks to the high the previous day, triggers a trade. Again, you can see it trended most of the day. Kind of hold towards the close. Short, same rules, only opposite. I like symmetrical trading strategies, right? So here's our 50, so we're below it. So we're gonna, if we break down, if we break the low the next day, that's gonna trigger a trade, right? Next day, sure enough, breaks down, about 75 minutes into the trade. And again, kind of follows through most of the day. One more example. Again, here, we're below the 50. I got an up day. It's an up day, but we're below the 50, so I'm only going to short this. Can we break the low of this bar the next day? It's going to trigger a trade. Very simple ideas, right? So sure enough, it takes a while. About 2 hours ago, does finally break and trends the rest of the day. So I do have a cutoff limit. I'll address this a little bit later as well, but again, if we want big winners, that's usually a function of time. If we're day trading, we're not going to hold overnight. So at some point, I got to cut off the entry. So I don't like to trade with less than 2 hours to go. We got pretty close here. Almost the 2 hour limit would have triggered here. About 10 minutes to go with our limit here. Because again, if I want a big winner, I need time. All right, so these are general trading rules. And I'm going to show you how to make up your own rules, how to track your own rules, how to learn a strategy, how to improve that strategy. So again, my entry is going to be a break of the previous day's high for a long, or the break of the previous day's low for a short. So what does that mean? What does a break mean? It goes through 1 cent, 2 cents, 5 cents, 10 cents. Well, the short answer is it all works. So what you should do is test it. So obviously, if you do 1 cent versus 10 cent, you're going to have more trades, right? More things are going to trigger. You're going to get tagged out a lot more. But, you know, if you did 10 cents, you'd have fewer trades, but you're giving up 9 cents on all the winners. So, hey, pick a number. All right, just say it's 10 cents. All right. Oh, and then I want to say, hey, you're going to toss any, if it breaks the opposite condition, throw it away. Right. So if we're going long and it breaks the previous day's low, throw it away. If we're only going short, if this is a short, because we're below the 50-day moving average and it breaks the previous day's high, throw it away. So you're going to toss it. All right, hey, initial stops, 20 to 40 cents are going to work. So, hey, pick a number. All right. I find that newer traders like smaller stops. Again, you're going to get knocked out more, but some people are more comfortable taking that smaller loss. So let's just say 20 cents. You need a break-even stop too. Once it moves in your favor, X amount, move your stop to break even. Now you can't lose any money on the trade. Worst case, you'll scratch it. Just say 20 cents. All right, generally going to target the end of the day. And so what you can do here is, again, I use a manageable list of liquid stocks, S&P 500 stocks, maximum 12 longs, maximum 12 shorts on the list. Sometimes I can't get a full 12, but like I say, maximum 12 longs, maximum 12 shorts for a maximum of 24 to watch. And hey, most trades aren't going to trigger. Either you're going to toss it or it won't trigger. But again, if we use these numbers, put that in a spreadsheet. Just put it in a spreadsheet. When you get home from work every day, just track it. Whatever your rules are, track it. Then what I want you to do is keep a second spreadsheet and then just pick one rule to test. So everything's going to be the same except for one rule. So hey, your second rule is, say we're going to try 2 cents, a break of the high or low by 2 cents. And then track that as well with the second spreadsheet. End of the month, you have enough trades to say, hey, what works better? All right, that other rule worked better. We'll use this. Now we're going to test 40-cent stops versus 20-cent stops. Track it for a month, see what happens. So again, you track this stuff for a couple months, you'll be able to keep refining your strategy and seeing what's going to work and also what's going to work for you. If it's close, then you get to pick something that's going to work for you. Again, I find newer traders like tighter stops, and if you find that, hey, it's about even, maybe you take that tighter stop. All right, but just keep that spreadsheet. You just track that for a couple months, you'll know how to trade. Especially if you're new to trading, you'll know how to trade, and it didn't cost you any money here. And you didn't waste any money learning how to trade. You don't have to be like me who learned how to trade 15, 20 years ago. All of us had to lose, $10, $15, $20,000 learning how to trade. Right now you can paper trade stuff, you can simulate it, But paper trade it first, then simulate it. If you can't make money simulating it, you're not going to make money with real money. All right. So I did track this, by the way, for a year here. I don't keep tracking. It's too much work based on the fact that I give it away for free. So I don't keep tracking it. But I did for a full year, tested various things. So just with very simple rules, was able to pull off, did get above 4 cents. So 4.6 cents per trade. Pulled out 75 points for the year. Average 4.6 cents per trade. So if you're doing 1,000 shares on everything, that would have been 46 bucks per trade. All right, I got some special rules here. Again, in general, this is the strategy. You can go back to the recording and check all this stuff. Pretty simple stuff. And let me give you some special rules as well, because you're gonna have all these weird special rules. I like to save the special rules for the end, just kind of some generic stuff, because you're gonna have to have some weird special rules when these special things happen. I save it for the end because it'll confuse newer traders. But number one, I put out both lists in one email. So I have a breakout list and a momentum list. So I just do it in the same email. So be aware which list is which, and also be aware that sometimes I can have a momentum. So we're looking for strong or weak closes. So I can have the same stock, since I use the same universe of stocks, same liquid S&P 500 stocks under 100 bucks, that I can have the same stock a long in one and a short in the other, right? The short on the breakouts is going to be a short because it's above or below the 50-day moving average. Doesn't mean it couldn't have been a strong close that day, right? It's below the 50, so it's a short on a breakout, but it had a strong close, like a big up bar. Well, that could put it in the momentum list. So that's entirely possible. So, but again, they can't both trigger, just so you're aware, right? Because if you break the high of that bar on the breakout short, you throw it away, right? You're going to toss it. If it does the opposite condition, you toss it for one strategy. So just be aware you can have a stock on both lists and they could be opposites, have an opposite bias. Again, you're just trading the strategy. Like, the rules are the rules for this stuff. And again, they can't both trigger. Just be aware. Wide spreads. So again, if we have an edge of 4 to 6 cents here, we can't, can't give away our tiny little edge on bad fills. So again, if it's a wide spread, so I don't trade the first 5 minutes. I just want to emphasize. So even on these liquid S&P 500 stocks, I don't trade the first 5 minutes. And some of you may not want to trade the first 15 minutes on some of this stuff. So you might look for, make sure the spreads come into 1 and 2 cents so you can get a good fill. And getting a good fill is going to be critical to trading a strategy like this with a small edge. So be aware of wide spreads and that you have to walk away, and that there's a lot of, look, the list is big enough that there's always trades too. If you were trading something like this, look, you can always walk away. There'll be another trade. Hey, you can't get a good fill. All right, walk away. Again, I have some time limits. Like I say, so I won't trade the first 5 minutes. Maybe you don't want to trade the first 15 minutes. I cut it off with 2 hours to go because, again, getting a big winner will be a function of time. And at some point, you got to cut it off. And then gaps, how to trade gaps. We usually get questions on gaps. And I'm going to show you some examples how to trade gaps. Again, I want momentum in my favor. All right, I talked about I always trade with momentum. I want the stock moving in the direction of my trade. So let's look at that. So here would be a short, right? So I got a red bar. This is a short. It gapped down. Didn't give me a chance to fill. Certainly give me a chance to fill. In the first 5 minutes, we're down here. So here's the thing. I don't want to put a limit order at my entry price and let it come back to me, right? That's the opposite of momentum. I want it going in the direction of my trade. So the problem is you put that limit order and this is what happens. Fills your trade and goes way against you. I want it going down through my entry. right? So it comes down through my entry, and then this would be the trade here. Now, in this case, it's 2 hours to go, right? We're less than 2 hours to go, so I throw it away. It's too late, but I want it going in the direction of my trade when I take it. That's how you handle a gap, right? I generally want 2 closes above my line before it reverses and goes down through it. So this one I'm going to toss because we didn't have enough time here to take this trade, but here's another example, right? So here's a stock gap down, comes back to our entry line. All right, you could have put that limit order there, and this one would have worked, but again, you're catching that falling knife, right? It never closed above that bar, and again, generally I want 2 closes above the bar. So again, this is what generally happens, right? Never closed, like the first close above the bar is here, second one here, never triggered, so you didn't catch this falling knife. Here's an example where we did do it, got 2 closes, right? So here's your entry, gap down came up, we got a 1 close above the line, a second close above the line, and then it triggered. So 1, 2, and then triggers on 3. That's how you want to trade it. That's how you avoid catching those falling knives. All right, here's an example of, I said, look, this is a long side trade. It's green here, but it broke the low of the previous day, right? Broke the low, throw it away. And again, you could have these rules here where you're throwing away more things or throwing away less things, depending on how many trades you want to take. You want more or less trades. So again, I think if you can pull 4 to 6 cents per share out of the market, out of a strategy, small edge, just replicate that small edge over and over again. That's how you can day trade. And again, in the case of most of you guys, you probably aren't going to end up trading something like this, but you're definitely going to learn how to trade if you just religiously look at this every day for a few months, if not a year. And, you know, again, you can control how many trades you want. What are your rules for tossing it? What are your extra rules of, you know, your time limits? You know, trades the first 5 minutes, first 15 minutes. Obviously, there'd be fewer trades. You can trade the first 15 minutes. When do you cut it off? 2 hours to go, 3 hours to go. Maybe you guys go to work. Maybe you only want to do a 2-hour window. See what you can do with that. All right, and maybe you can pull 4 to 7 points out of the market. Again, the rules are the rules. Trade it like it's a mechanical system. Follow the rules. And then you know how to adjust those rules. And just remember that money management can be your edge. How you squeeze out extra money is going to be all in the what stop did you use? What was your break even? What type of trailing stops did you use to lock stuff in? I didn't even talk about trailing stops just because it gets too complicated for new traders. But hey, how do you keep locking in those gains and then giving yourself enough room to get not kicked out of get kicked out of a big trade? All right, so again, your big takeaways, even if you're not going to trade the strategy, is repetition is going to be the key to learning how to trade. Doing this 10, 15 minutes a day, flipping charts, 15 minutes a day, scoring this, come home from work and score this every day, you'll learn how to trade. Again, we're looking for small edges. I understand that people are telling you they're getting rich in a month of trading or 5 trades or some type of crazy thing. That's not how it works. You got to grind it out. You're looking for a small edge and you're going to exploit that edge. Got to have a process for maintaining that edge. Hey, always test out different rules. Check if there's a better way to do it. Understand you're going to have periods of time. The market goes sideways, it grinds, or the volatility goes up and you have trouble making money, you know, that month. Well, you know, that's just part of trading. So even though we've had kind of a weird market, higher volatility, in general, the market will go sideways 2 to 3 months out of the year. And you're gonna have to grind out those months. You never know when it's gonna end. So I don't have different rules. Can't just make up different rules, or can't just guess that the market's gonna start trending. So I just stick with my rules here, have that process. Also, again, it's all about learning strategies, right? This is a strategy. I'm teaching a strategy here. I'm not giving you picks. The list isn't picks that you pick and choose from. The list is a strategy, and you got to focus on strategies. That's another problem of new traders, just thinking that someone's tossing you picks. That's a sure way to blow out your account. Understand the strategy, learn the strategy backwards and forwards, and then you can implement the strategy with the list. And then, hey, even if this doesn't work for you, if this is, at least it's going to get you a step closer to finding something that will work for your particular situation. All right, that's the lesson here. I also have today's list already got sent out. If you're not on a list, I'll show you how to join the list. Obviously, right here at the very top here, learn to trade, join the daily watch list. Just join that. All right, and you'll be on the watch list. I've already sent out today's list, but we do have 12 longs and 12 shorts. And you can see on the longs, we're above the 50. That's the yellow line. Narrow range day above the 50 versus a narrow range day below the 50. Okay, a simple strategy, small edge, just grind it out every day. Hey, we got any questions on this strategy? Again, I'll stick around and answer any questions on this strategy or anything to do with trading. I'm actually going to stop the recording. We'll stick around and answer your questions.